Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It is Wednesday, May 23rd, 2007, and the markets are closed. We did have a little bit of selling today. We had initial strength, actually, and then it was met with some intraday selling that brought the market right down to the level of support that we've been looking at, which is the 152.50 level. And you can see that's also where we have that rising 5-day moving average. Notice also how that 5-day moving average acted as support for that first sell-off that we saw right here. That's about where that 5-day moving average came in if we're looking at this 2-minute chart right now. But even on that 2-minute chart, you can see that this support break right here is where it started to move lower, and then this prior little level of support became resistance. But we won't look at 2-minute charts. That's not what this is all about. We do still have a uptrend, though, on this 10-minute time frame. But now that we've seen this market break down like it has, and we've got these moving averages crisscrossing again, I think that instead of saying that we're bullish, I'd say we're more neutral in the short term right now. But clearly, the longer-term trend still remains higher. And the obvious thing here is that it's very extended. This market has had a huge rally over the last 2 months, and a little more meaningful pullback wouldn't come as a surprise. Candlestick people are going to call, say these spinning tops or dojis or whatever they want to call them. But really, you can get a lot more better feel for what's really going on in the market by taking a look at the intraday time frame rather than relying on waiting till the close and seeing what kind of formation you get from your candlestick charts. But the uptrend is still intact. It's turned more neutral for now. I think that we've still got the rising 5-day moving average. That gives us reason for not getting a short in here. But over another day or so, that could start turning lower, and then maybe we could have a little bit more meaningful pullback down towards this 151.50 level or so. But still, the market is in good shape. You've got to look at this daily uptrend, and anyone who's tried shorting this for more than a day or so over the last month and a half has been wrong. So, just sit on the sidelines and cash if you're not willing to believe the strength here. It sure beats being short and getting run over all the time. One of the times you're going to get it right, but it's just not worth the continual little paper cut losses you're going to experience as the market has continued to grind higher in here. The Nasdaq 100, the Qs here, we see that they finished with an 18-cent loss at 46.87. And what we were looking for in here was support. Really, what I said yesterday, the most important level of support was down near 46.60 for 46.70. So, or 76. I'm sorry, 46.70 to 46.80. And we came down and pretty much tested that 46.80 level. So right now, same thing. We're at a rising 5-day moving average. That gives us reason to continue to give the benefit of the doubt to the buyers, but we are also at a level of prior resistance that if it doesn't hold as support, it could bring about further selling. So there's nothing in here to suggest that it won't hold, but as far as buying goes, you want to wait for the buyers to retake control before you take a buy at these levels, rather than just blindly hoping that support holds once again. But overall, the primary trend remains higher. We have this important level of prior resistance, which is now being tested as support. It should hold, but if it doesn't, that's what stops are for. And if you're in cash, why not wait until the buyers retake control before entering once again? The semiconductors have really been playing around with this 37 level, and it's been holding above that over the last week and a half. But we've had this declining 5-day moving average. Yesterday I said that it needed to get back above 37.60, or rather 37.65, before we really could have confidence that the buyers were back in control, and also that 37 had to hold. Well, the 37 was tested early on. Looked like it was going to hold after that gap lower on some bad news, I think from, well, I don't know, from I don't know who it was. One of those guys had some bad news. I think it was ADI. But anyways, the 37 level didn't hold, and then we had selling right into the close. So looking now at the short-term time frame, we've gone from neutral back to negative once again, and that raises concern. There's still a good uptrend here, but it's becoming less convincing. I think that you want to see basically about 36.5, 36.40 to hold as support. We do still have a rising 50-day moving average, so want to give the benefit of the doubt to the buyers. But the longer-term trend, looking at this weekly time frame, is still intact. It just looks like we're getting a pullback to a prior level of resistance. So it's a healthy pullback, in other words. The IWM Russell 2000. Once again, we saw a little bit of selling in here, not once again, but on the same note as the other indices, we saw a little bit of selling in here today. They were down 27 cents or 0.32%. And the important thing yesterday was that the market broke past that $83 level that's been acting as resistance lately, and it held as support today. So that's good to see that the selling didn't take it back down below that $83 level. And like I said yesterday, I view the more important level of support for this market at $82.50. That's where we continue to give the benefit of the doubt to the buyers, and that's also where you have that rising 5-day moving average. So focus on the 82.50 level rather than 83 on the IWM, because a lot of times you can get just a quick sell-off down through that level before it rallies back up. But with the trends as clearly higher as they are all across all time frames, except for the shortest term, we still want to give the benefit of the doubt to the buyers. We want to look at it and respect the selling and not try and pick bottoms of any little move, but instead wait for the buyers to retake control. Let's take a look at the stocks we've been looking at. First of all, Actuate, symbol ACTU. We got involved at 634 here on Monday. I'd suggested raising your stop to $6.39. Let's keep it there. Came very close at the end of the day to getting stopped out of that one. Finisar, FNSR. This one we got involved in at $3.74 right over here. And I'd suggested your stop go to $3.76. Let's raise it by 2 pennies. Let's raise it to $3.78. And lastly, we had TASR. TASR, I told you yesterday that I had sold out of the stock because I thought it was failing, but our stop was at $6.20 officially. So hopefully some of you guys held instead. I did get back involved today and scalped it on the long side. But if you're still in the stock, it really looks good to me. This level of resistance from the last couple of days was tested as support late in the day, and then the buyers came back into it. So the official entry here was 932. The stop was at 920 as of today. Let's raise that stop to $9.38 in shares of TASR.